I thought there were some similarities between Steve Cohen and Preet Bharara. They are both very ambitious, smart, good at convincing other people to join their project, whatever it is. Preet, who's the former U.S. attorney in Manhattan, who's now has a podcast since Mr. Trump relieved him of his job a few months ago. He was a master marketer of his office. He was very good with the press. He loved attention. He loved holding flashy press conferences. He was very ambitious, and people still believe he's going to seek some kind of higher political office, and that does seem likely. He's probably just waiting for the right moment. I think both of them would be very difficult people to try and work closely with, to be honest, because they are so driven and demanding. Steve Cohen lacked the kind of outward charisma that I would say Preet has. Preet is very good on TV. He's charming. He's funny. Steve Cohen was a little more awkward, and I think my sense of him is that he's a bit more of a loner and was much happier behind a trading screen than dealing with people. And in fact, he would sometimes stay up all night trading these different sort of securities you could trade electronically from your home on your computer. So he was just obsessed with trading. I mean, that's really his only interest in life. And he did become, a very renowned art collector later. I mean, he still is. But really, trading was his passion and still is his passion. So the government, in the course of investigating SAC Capital, and this investigation started in 2006 and just continued until, only recently did they kind of finally throw in the towel. But at one point, someone came to them and with some evidence of this enormous trade that had happened in 2008 involving these two drug stocks. And someone had flagged a suspicious trade that had occurred right before some drug trial results were announced publicly. And this drug trial result was very disappointing, and these two stocks plummeted once this news was disseminated. And in fact, it turned out after the SEC went and kind of pulled all the records that SAC Capital had made this enormous profit before anyone else knew this news. And it seemed like, just looking at the trading pattern, someone at SAC Capital knew the drug trial results before they were publicly announced. So this was their suspicion, and they had to go into kind of piecing it together. Who was the trader? Who was the source? Where did the trade happen? Who knew what? So eventually they figure out that the trader involved in this whole case is this gentleman named Matthew Martoma, a young portfolio manager who had joined SAC Capital from another hedge fund in Boston. He was a biotech and pharmaceutical stock expert. He had spent some time at the National Institute of Health. His wife was a physician, so he really knew a lot about the world of medicine, and this was his area of expertise. And he had spent months at SAC Capital researching these two drug companies and this drug they were developing to treat Alzheimer's disease. And the kind of the race to develop a cure for Alzheimer's disease is potentially a very lucrative one for someone. I mean, there's no cure for this disease. It affects, I think, 5 million people, and many drug companies have spent billions of dollars trying to develop a drug to treat Alzheimer's, and anyone who successfully managed to do that would make a tremendous amount of money. So anytime a drug company embarked on one of these drug trials, the entire Wall Street investment community would watch very closely, because if you made the right bet on the right stock tied to this drug, you could just make a lot of money from this drug trial. So Martoma did what a lot of hedge fund analysts were doing at this time, which is he tried to find experts in the field who could help him learn about this Alzheimer's drug. He wanted to know every single thing about it. And he engaged an expert networking firm. And these have kind of gone out of favor now as a result of all these legal scandals. But at this time, 2008, 2007, a lot of hedge funds were hiring these companies which basically offered to connect investors with executives and other experts, medical doctors, researchers in different fields at different companies, so that these hedge fund investors could develop research ideas And, for example, if they decided they were going to start trading, Intel, and they didn't know anything about Intel, they could call one of these firms, and for a very large fee, this firm would connect them with people who had previously worked at Intel or who did business with Intel or who even work there currently. And those people could presumably educate them about this company and this industry. And of course, they were not supposed to disclose material, non-public information, confidential information that would be illegal to disclose. And they were all told this, but they weren't policed very closely. So what you had was a recipe for problems, sort of obviously, which was these very driven hedge fund investors paying thousands of dollars to speak to these often mid-level managers at these companies and just pump them for information that they could use trading. And it just, on the face of it, seems like a potentially very corrupt situation. So anyway, there we have Toma. He hires one of these firms and he says, send me everyone you have who's following this drug. It was called BAPI, was the short form for this drug. And he ends up hiring, agreeing to consult with a doctor who is helping to oversee the BAPI trial. So perfect source, right? This guy's going to know everything there is to know about this drug trial. And now, of course, this doctor was a very accomplished. He was, I think, at this point, well into his 70s. He was, he had an endowed chair at the University of Michigan Medical School. He was sort of a lion in Alzheimer's research, and had made tremendous contributions to the field. And he sort of, had started doing this hedge fund consulting on the side just to make money, and it was sort of fun. And we're still not totally sure what motivated him, greed perhaps. And so he and Toma start talking. And of course, over time, the government showed that he sort of corrupted this doctor into sharing these confidential results with him that he was not supposed to share. And this is ultimately how Toma was convicted. The doctor ended up testifying on behalf of the government. The doctor avoided going to jail himself in exchange for doing that, but he, of course, lost everything personally and professionally by having to plead guilty to securities fraud and violating all of his confidentiality agreements. And he was really disgraced, and it was quite sad. In a way, it was a real loss to the medical field that this doctor, this tremendous talent expert, had to kind of retire early because he had been, speaking out of school to this hedge fund trader. And eventually, Toma was able to view this presentation of these results before they were public. He is alleged to have spoken to Steve Cohen right afterwards, and then SAC spent about a week just dumping a $1 billion position in these two stocks. And then a few days later, the doctor actually presented the trial results publicly for the first time at a medical conference, and the two stocks plummeted. So everyone wanted to know how SAC Capital had avoided losing money because they had these huge positions. Well, it turned out they had found out early that it was time to sell, and they sold. And ultimately, when the government pieced all this together, they had expected that Toma would be their star witness in a case against Steve Cohen. And in fact, it had turned out that Steve Cohen had later fired Toma, so Toma was living in Florida with his family. And the government thought, we have this huge mass of evidence against Matthew Toma. He has 3 young children and a wife. He's not going to want to go to jail for a long time. We're going to use all this as leverage to squeeze him and convince him to testify against Cohen, his former boss. And they were very confident this was going to be their kind of golden key to the whole case. And what the big twist was that Toma refused to talk to them. He never cooperated. He would never even talk about taking any sort of plea or anything. They were really stumped by this. I think it shocked all of the prosecutors and the FBI agents involved. And ultimately, Toma was found guilty. Has lost several rounds of appeals, and he's serving an 8-year sentence in Florida right now. And we still don't know, what his side of the story is. He said he was not guilty, but he never testified in his own defense, and he remains something of a mystery to this day. What his motivations are and why he would be willing to go to jail for such a long time and be separated from his family. to protect Steve Cohen or for some other reason.
Yeah.
It's a big mystery.
Interesting.
Yeah.
Anybody else in there that you found interesting, maybe not at that level, but important to this?
Well, I really enjoyed getting to know some of the lower level players in the story. And one thing I figured out fairly quickly was that, you have three groups of people involved in these securities investigations. You have the FBI, particularly in New York. You have the prosecutors in the U.S. Attorney's Office. And then you have the Securities and Exchange Commission, which, has an enforcement unit. And they are responsible for maintaining the integrity of the market and for investigating alleged securities violations. So the three of them all work together to make these cases. And in fact, one thing I learned reporting on this is that they all feel that the other groups are getting too much credit for work that they're doing. And there was always this sort of competition between them to get credit for all this work. And the FBI would have to go out and they are the ones who would listen to wiretaps, and they would do, they would arrest people. The SEC lawyers were often in their offices studying trading data. I mean, doing this really kind of difficult grunt work, honestly, that takes months. And then the prosecutors got to have their press conference and their trials, and it was much more glamorous. And so everyone was sort of resentful of everyone else, and it was helpful to me in a way that I was able to tap into some of that. But I found those characters fascinating, and I also really enjoyed the just meeting so many just really sharp traders at different hedge funds, people who had worked for Steve Cohen or who knew him, people who were currently working for him. People who had friends who knew him, and I just found them to be a really fascinating breed, and also just often very funny. And I loved to learn about the way they thought about trading, which was, it was really interesting.
Yeah, I'm sure.